do you guys actually provide that as a service to clients? Like, is it a service that's sort of well promoted by your business, the whole risk analysis and management side of things?
Oh, so the training,
Yeah.
absolutely, and it's obviously again specifically in the meth space, because we've got a high level of awareness of the risk itself. We can provide people with training sessions, awareness, what your systems might look like, and so some of the policies and procedures that you can then take through to quickly go from we don't have anything in place to deal with this to we've got something in place and making it part of your process.
Yeah, because I guess previously we've talked about meth, and that's obviously a scourge, and if you're looking at it from a risk point of view, massive risk point of view for property owners and those dealing with it. But I guess today we want to talk more about risk in general around property and around property management and building management and things like that. So what's your initial sort of take on like, how do you define risk really? Like, where does it start for you guys?
Well, when I look at risk, so my background was in insurance and risk management. Many years ago, when I first started my professional career, and obviously what we're doing in the meth space, so we're a meth risk management business, and one of the things that we do is provide meth testing services. But a lot of that is then trying to work with people to get them to look at and engage with the reality of risk. And that's something that I've been doing for over a decade now. And I think that one of the challenges when it comes to risk, and particularly in the property space, is that people, if you start talking about risk, it's characterised as scaremongering. And all that really seems to do is then sort of switch people off to the reality of risk and leave them in a state of blissful ignorance.
Yeah.
When you set that alongside, the Kiwi 101 for risk management, she'll be right, mate.
She'll be right. Yeah.
There is a little bit of a challenge that's in there, but the problem with that is that those things don't change the reality of the risk. And by people not being aware of the reality of that risk, that's when they get caught out. So a little sort of phrase that we've kept on trotting out for years, right, is we're not trying to catch people out with this whole myth thing. What we're trying to do is to make sure that people don't get caught out by it, and that's whether that is a tenant, a landlord, a prospective purchaser, anybody who sits within that advisory chain around a property sale and purchase. The real estate agents is a classic case in point, because at the end of the day, when it goes wrong, everybody's looking around for somebody else to blame. And real estate agents are a prime target because of the fact that they've got insurance policies that sit in behind them, because the attitude is, well, you must have known something that goes on. And again, that only happens because people haven't made a conscious decision around how they manage the risk. Why haven't they made a conscious decision of it? Because they're not aware of it. And why they're not aware of it is because nobody's talking about it. And it's not just the issues around methamphetamine, for example. It could be historic contamination of land, issues around things like asbestos within buildings. A lot of those things, it's all buyer beware. Whole caveat emptor that's around the property sale and purchase side of things, and property, the ability to sell properties easily without encumbrances seems to be a part of a significant driving force behind risk and risk management when it comes to the property industry.
Do you think New Zealanders are a fairly risk-averse bunch? Like, do you think that we view risk as a negative rather than like looking at it as a positive? Because like you said before, you're not trying to catch people out. You're trying to make sure that they're not being caught out. And there's quite a difference between, you can just swap a couple of those words around. There's a real big difference there, right? But it kind of, when you hear the word risk, you always think, oh shit, and it's like it has a negative connotation.
100%.
But then we really should be looking at it from a positive.
Well, it's one of those sorts of things where, again, obviously our business is all about saying, well, here's this risk, and then these are the things that you can do as far as mitigation of that risk is concerned. So what we've spent many years trying to do is, okay, we'll reduce the likelihood of the loss event actually occurring. And so that's basic provision of those basic low-cost services on the front end, either in between tenancies or at the time of a sale or before you put that coat of paint on the wall. Spend a few bucks making sure you don't have the problem, because if you do have the problem, those few bucks will means that you can nip it in the bud.
Yeah.
If you don't have the problem, then you can just proceed, and it's been a low cost risk management exercise. But if you don't find out that you've got the problem, and then you take other steps to move forward, so an example would be putting a coat of paint on the wall. So around the sale and purchase of an ex-rental property, it had a bit of a hard life. The last set of tenants were a pain in the ass. Didn't pay their rent on time, bit of damage to the property, always difficult to deal with. Advice from the real estate agent, he should probably tie this up before we put it to market. Right, so professional advice has been provided through to the purchaser, but they haven't been considering the risks associated with meth and meth-related behaviour. So now we've got a coat of paint over an existing meth problem. That makes it significantly more expensive to resolve. So all because a real estate sales process doesn't include active consideration of the risks presented by meth contamination, professional advice has been provided, that potentially comes back and lands at the feet of the real estate salesperson and sales company. Well, you told me to do this, and now instead of it cost me 10 grand to sort out, it's going to cost me 50. And I'm not very happy about that.
What sort of disclosures do real estate agents have to provide then? Like, so if they can, do they have to prove that they absolutely did not know that something went on in that property, or do they have they've got a duty of care to do an investigation prior to selling it, or how does that part work?
So that's all governed by the Real Estate Agents Act and advice that comes out of the Real Estate Authority. So a government institution. Not an absolute expert in that area. Brady is the reality, but there are obligations around disclosure. Where meth is concerned, though, it's not visible, right? So you can't see it, you can't smell it. So it's a hidden issue, and under those circumstances, it comes into what should a reasonably competent licensee be aware of. So that's the sort of situation where it becomes a bit more of an area of grey. So you don't have to go looking for hidden issues. But if you, as a reasonably competent licensee operating in New Zealand, are aware that people with meth habits generally damage the property more, they can be a little bit difficult, they might have lots of comings and goings of the property, and you're hearing that sort of information, then under those circumstances you should have a procedure that would say, if these things happen, then our next step will be to get a screening assessment done on the property before we go any further with the sales process. For lots of different reasons, it doesn't happen as much now as it used to happen. So I go back to pre-2018, before the government policy changed. 30% of sale and purchase contracts were subject to a low-cost screening assessment. Now it's less than 5%. Oh
God!
So, yeah, so you've got a massive drop. At the same time as the reality of the risk is increasing. So again, what's actually happening here is that rather than deal and reduce the impact of the reality of the risk, we're trying to sort of suppress and mitigate the perceptions of the risk, because that's the sort of thing that clears a path through to sale of the property for the maximum value, as opposed to potentially slowing things down, making a slightly more difficult conversation, but actually nipping the problem in the bud. So in the context of property sale and purchase, a vendor is most likely to have recourse to insurance, again a risk management tool that people put in place. A purchaser has no recourse to insurance. So now they've bought a property with a problem that $300 would have flushed out into the open, but because nobody's aware of it, because people aren't talking about the reality of the risk, not enough people are doing that, so you're getting a whole bunch of people who are getting caught out.
Yeah. To me, like, risk is about, it's a level of comfort, eh? Like, if you're going to be comfortable or uncomfortable about a situation, it's generally like how you determine the risks involved with that situation. That's just what sort of comes to mind for me. And I guess with the risks that we've taken over the years with, say, business or property, or even buying a bloody car, or where to go for dinner on a real low end situation. But it's about that level of comfort. And I guess we look at experts like yourselves in big, say, property situations to help us with that the information that we need to make ourselves feel comfortable. So with regards to that, like, what are the sort of the core principles that you guys would have operated by to about risk assessment?
So I think you're absolutely right. So there's a lot of emotion that's associated with risk, and there's that old expression, right? Ignorance is bliss. So people have a really high level of comfort and confidence when they're not aware of a problem. And as soon as you start talking about issues, then that creates uncertainty. People don't like to feel uncertain, and it's much easier, therefore, to sort of push it out of the way. The problem with that is that people get caught out. So what we talk about in our specific space is to be making conscious decisions. So providing with tools, people with tools to effectively basic things, checklists. When you're looking at a property, or if you're involved with a property, these are the indicators of risk that increase the likelihood of there being problems associated with that, with our specific area of focus. Not enough people use those things. Not enough people make a conscious decision. It's back to she'll be right. My level of comfort is much higher if I don't have to contemplate that might be a problem. And again, when you look at the real estate sales space, it's emotionally led. So we've got the biggest investment typically that we're all making in our lives, which should be rationally driven, but it's emotionally led, and we want to pull out the rationality of it, right? So again, you want to get this property, Brady. The fewer conditions that you can put as far as your offer is concerned, the more likely you are to be successful. I really want this place, and that's the way in which the game gets played, right?
The way you were describing that, I remember having a chat with Roger Shepherd from Auckland Body Corporate about that, and he mentioned that people spend more time deciding what shirt to buy rather than how much time they spend on deciding to buy a house or not. And it's that sort of, I guess it's that. Do you think Kiwis are like that, or is that people in general?
No, I think it's people in general. I think, I came to New Zealand back in 1997, and one of the things that I loved about New Zealand is often commented on when you compare Kiwis to Australians, right? So those people who do the trip, they go and spend a bit of time in Australia, then they come over here, and it's how much more friendly Kiwis are. And I think it's part of that human condition, but it's particularly evident, or at least it has been, is that Kiwis are very trusting, very tolerant. They take people at face value to a much greater extent than other parts of the world. And where this specific issue is concerned, where the people are involved with using methamphetamine are great manipulators of emotions, that opens everything right up, and then it flows through as far as this whole risk management conversation is concerned, right? So if you've got a relationship with somebody, they say, no, don't worry about that. That we tend to want to believe those sorts of things, because actually it's a bit easier to do that than it is to actively engage with the reality of the risk. And as I say, when you look at the reality of risk where meth is concerned, at some point it will become an issue as far as health, safety and well-being is concerned through the contamination side of things. But before it becomes a problem with that, you've got a reduced likelihood of your rent being paid on time, more damage to the property, difficult people to deal with, and a much greater risk, let's say, in the property management and building management space, a higher risk to personnel from the behaviours that are associated with that. But because the perception of the risk is where an awful lot of time, energy and effort has been put into, particularly by this government, most people have sort of said, oh, well, it's not a particular problem, we don't need to worry about it right now. So they've got none of the systems in place that protect them in their PCBU responsibilities, which then have this effect of reducing the problem to other people.
How much of risk, so you've got the actual risk identification, then you've got the mitigation side of things, where you're actually going, well, here's the risk and here's how you could potentially deal with the risk. Like, which side do you guys, is it a fairly even balance sort of thing, or do you sort of spend more time talking about the mitigation, or does it depend on the situation that you're dealing with?
So I think the basic principles of risk management are, you've got to think about what's the likelihood of losses occurring, what's the consequences of those losses occurring, and then what's the cost versus the benefit of the mitigation that's associated with that. So that's your kind of risk assessment process. If you look at meth-related behaviour occurring in a rental property, what's the likelihood that it's going to happen? Varies depending on the type of property that you've got, but let's say the buildings that you guys are involved with from the management side of things. Is it going to happen? 100%. Right? Absolutely no doubt that it's going to happen within those buildings. So certainly as far as use-related behaviour, what's the likelihood of manufacture occurring? You'd have to say that there's a very high likelihood that thing is going to occur as an absolute certainty. based on some of the work that's been done across large multi-unit dwellings? Yes. But is it going to happen as often as the use-related behaviour? No, it isn't. So then what's the consequences of those things happening? Right? So at the individual property level, as I say, you've got the impact as far as behaviours is concerned, damage, rent payment, all that sort of carry on. So if we're talking to individual property owners, that's the conversation that we are having to say, well, you want to avoid those consequences. You want to avoid the direct impact as far as the apartment itself is concerned, which can be well past any limit of insurance. Right? So as a property owner, you're in there with your body corporate, you've got your body corporate insurance. What's the insurance policy? Talking about how many claims does that allow in a given year? If those claims blow out, how are you going to pay for getting this thing back up and running is the reality of it, right? And so that's where we will take those conversations. In the building management body corporate space, you've now got this sort of situation where what takes place behind those closed doors, as soon as you open the door, whatever's been going on in there is now coming out into the common property, and that then can create a knock-on effect as far as the common property itself is concerned, depending on the design of the building, where you've got discrete apartments where there's no transition of airflow between those apartments, less of an issue. But where you've got some of those systems that aren't quite as discrete, you can get air flowing around all over the bloody place, and contamination from one private dwelling into the common property, then through into other private dwellings as well. So it depends on who we're having a conversation with as to what how far that side of things goes. But again, I think if the people who are within that communication value chain, right? So it's harder for us to get to the owners, and then often it's tempting either at the body corporate level or the building management or the property management level just to say, well, again, it's a bit hard for us to have that conversation because this competitor over here isn't having it, and therefore we're seen as scaremongering. So often it becomes a sort of situation where we'll just kind of park it off to one side. What does that mean? It means that there's less focus on the risk and the realities of that risk. We're more likely to have the problem happening, and then everybody's running around after the fact, trying to resolve the issues instead of getting in front of it.
The point you made before about the value of the insurance payout as opposed to the actual cost of remediating one of these meth contaminated apartments, that's interesting. We've seen that recently in a building where the body corporate insurance payout was X, but then the resulting claims and cost was X times 2, and it's like who's footing the bill for that, and it's it's quite often people having to put their hand in their pockets to top up these payments, because by the time you get through the testing, the decontamination, refitting the apartment in this case, it's not just $50,000, it's potentially $150,000 to fix.
And so again, there's a number of ways in which that risk can be managed. And what we've invested a huge amount of time in is trying to get people to reduce the likelihood of loss. Okay, so having some basic low-cost practices that mean that you can hold people accountable. By being able to hold people accountable, you're less likely to get the people coming into the property who are going to engage in the behaviour that's going to get them into bother. What we're seeing, again, because people are focusing on the perception of the risk rather than the reality of the risk, is less people taking up that opportunity to reduce the likelihood of loss at a time where government policy means that the likelihood of the loss occurring is increasing. So it's sort of this counterintuitive thing that's happening because we're choosing to ignore the reality of risk and focus on the perception of it. So you're more likely to have a problem, and what does that mean? Well, if there's more problems, again, in the multi-unit dwelling situation, most owners will think, I've got cover under the body corporate. Body corporates do a good job of putting that in place, but it's finite in terms of what it does. So what's the opportunity there? And we don't get involved with this, but there are other products out there where you can get top-up insurance cover for these sorts of risks. Okay, but if people aren't speaking to the owners of properties about that reality, because we want people to think that everything's fine and there's no problems to see here, as opposed to the reality of this stuff is to a significant degree out of our control, then people are going to get caught out. And then once they get caught out, they're all casting around for somebody else to hold responsible. Property manager, you never told me about this. How come? That's what I employ you for.
Yeah. What do you think it is like about? Is it human nature, or what is it about people that they choose to ignore risk? Like, why would someone ignore some really sort of major or even minor risks? What is it about humans, do you think, that we just go, where the whole "she'll be right" comes from?
So again, just my opinion. Human nature is we don't like being in positions of uncertainty, and having to contemplate some of the stuff that we talk about creates a significant level of uncertainty. Now, there are things that you can do, as I say, to mitigate the likelihood of the loss occurring, but then that requires a bit of thought. There's some costs that's associated with that, and so if you've got a whole bunch of people saying, look, you don't need to spend that money, then it's kind of like, well, I'm more certain in my own headspace by listening to that advice because it's what I want to hear rather than what I need to hear. So then you look at some of the motivations that's sitting behind some of that advice. So some of that advice has come out of the government of New Zealand, and it's like, well, from a health and safety point of view, you don't need to worry about this stuff. It's not a problem. Now, that's massively up for debate, and we talked about that at length last time. But if the government of New Zealand says you don't need to worry about it from a health and safety point of view, and we're under constrained financial times, then it's a cost that I can afford not to pay. Now, the issue, as we've talked about, is that meth risk goes above and beyond health, safety and well-being associated with contamination. It's the unpaid rent, it's the damage to property, it's the impact on neighbours, it's the challenges associated with property management, and it's the potential for those behaviours to then have a knock-on effect as far as the physical and mental health and well-being of employees is concerned. So all of those things get ignored because what we want to hear is what the government is saying rather than what we need to hear, which is that this is a real risk. In the property sales space, you have a situation there where anything that is an impediment to the sale is seen as a negative.
Right.
So if this hidden risk remains hidden, then there is no impediment to the sale. As soon as it becomes visible, then there is an impediment to the sale. So again, there's no requirement for people to go looking for hidden risks, but the reality is that they are out there. And by choosing to ignore them or downplay the risk potential that they present, you have the situation where people are getting caught out.
And I guess the inclination for those risks to be identified or to happen, the property market and cycle itself could have an effect on that, because if you've got heaps of properties on the market and the real estate market's booming, then it might be more likely to have them not brought to the front, or the other way around. But then if it's quite a tight market like it is now, people will be like, no, we just want the sale, so they may therefore push those things to the side, the rest to the side. Or
so I think it's influenced significantly by, is it buyers or a seller's market? So when it's a seller's market, the fewer conditions that you can put in there, the better, the more likely you are to get the property. When it's a buyer's market, now we've got that opportunity to put conditions into the sale and purchase contract, albeit again the fewer conditions, the better. Right? So this is a conversation that I had with a real estate salesperson shortly after the Real Estate Authority changed its advice through to agents around disclosure. So go back to 30% of properties being subject to a meth test at the time of sale, and now less than, and almost immediately after, down to less than 5%. How does those sorts of things happen? Conversations that this preceded was by this agent involved. Do you want to get a meth test done on that property? Or rather, Brady, can I get a meth test done? Sure you can. Miles, do you think you need one now that the government has said it isn't a particular issue? Yeah, because we can sort one out for you. But the fewer conditions that you put in, the better. Actually, that's one that I can push off to one side. Now, that was one particular instance, and I'm not sure how widely spread those sorts of conversations are. But again, what we've got is something that can create a barrier to a real risk, that can create a barrier to the sales process, that you can navigate your way around in that sales space if you're concerned. All that means is that people get potentially caught out on the back end of it.
Yeah, I mean, I guess from my own point of view, if that, like I said before, you've got to do what you've got to do to make yourself feel comfortable, and you've also got to have a I think a paper trail. So if the shit does hit the fan, then you can sort of lean on that paper trail and go, well, we've done this, we've done this, we've done this.
Yeah.
And you've got more ability to hold someone accountable if you have a paper trail than if you just said she'll be right.
Yeah. And that's good. I mean, in the context of the building management space, right? So that's having good policies, good procedures, and processes, and then following those and documenting those. Yeah, absolutely essential. But again, those things rely on people having an awareness of the risk, of the need to manage that risk, and then how they go about managing that risk. And again, in our particular space, what you've got is a suppression of awareness of the reality, an awful lot of energy and effort going into creation of a perception, and that gap between reality and perception is where, unfortunately, more and more people are getting caught out, and that is a disaster for them, and it doesn't need to happen, but it happens because we don't want to engage with risk. Yeah, it's as simple as that.
Yeah, you mentioned before about the upfront screening process, and what I take away from that is essentially you can make your life a whole lot easier by doing that work up front, especially from a property manager's point of view, where they're looking to get a new tenant into a tenancy. Having done property management years and years ago, we figured out pretty quickly that if you let any old man and his dog into an apartment or a property, unless you screen them well first, then you can make your job either really hard by just letting any old Tom, Dick or Harry in, or you can make it easier by having all these procedures and processes to go through to make sure that they're a good person, they are who they say they are, they earn what they say they earn. So it's about making.
But even that, for example, has become a lot harder now because of Privacy
Act,
law and all those sorts of things. So when you look at mitigation of risk, if you've got a good property manager or good property management disciplines, it makes a significant difference, right? So there's benefits that are associated with those sorts of things. So it's the screening of the tenant, the conversations that they have, all the background checking, etc. Are they doing regular inspections? So that there is a risk management discipline. So ironically, it's a requirement of insurance. If you don't do your inspections, you have no insurance cover. So there's a lot of people who manage properties on their own who don't do inspections, who have no insurance. They're just paying for something that, if they went to make a claim against it, then they wouldn't have the basis for making a claim. But again, because we were respecting the quiet enjoyment of tenants, and the vast majority of people don't get involved with dodgy stuff, and therefore that's entirely appropriate. But those people who do, you give them 48 hours notice to go and do an inspection. Everything's gone. There's nothing that's visible that's associated with that side of things. Having said that, we've seen situations where there's a professional property manager who is involved, and the state of the property takes more than 3 months to get it into that sort of condition. So again, what's going on there? So it's choice of your property management business, being clear on what their processes are and the procedures that they follow, very, very important as a risk management and risk mitigation tool. But all too often, what we're looking at in the property financial investment property space is an economic transaction where we're trying to reduce costs to as low an extent as we possibly can, rather than looking at a value-based service. So then again, risk mitigation, do the test on top of the property inspection piece, and the property managers have a good communication strategy that's associated with those sorts of things. That's the way that you reduce your likelihood of loss around the specific risks that we're talking about. And we've worked with people over many years where that has been really successful. They've cleaned up their book of portfolio, but it requires time and energy and additional effort to do those things. It's the right thing as far as the property investor is concerned, because you're aligning your interests with theirs when it comes to protecting the property asset, but it's a bit harder work. And because you've got to work a bit harder, and because there's a lot of stress in the property management space when it comes to financial pressures, because it's been commoditized to a significant degree, therefore we're putting more and more pressure on the property manager, which limits the property manager's time to provide a lot of the services that you need to stay on top of stuff. A lot of people say it's a bit too hard to do that, so I won't do it. And then now we've increased the likelihood of loss. And so what we're then saying from a risk management point of view is, okay, well, in some instances where people have given up on it, so a good example would be Kaingora. They gave up managing the risk, in my opinion, back in 2018. So when they aligned their practice with what the government policy was under the PMCSE, a meth report, they've fundamentally changed how they went to do. So they went from doing over 2,000 tests on the 70 odd thousand properties that they look after each year to do 200 or less. So an invisible risk. If we don't see it, it's not a problem. We'll only deal with it when we absolutely feel like we have to. And then what we've seen in the evolution through COVID and through addressing the whole housing crisis side of things is there's an awful lot more multi-unit dwellings which have got Kāinga property within them. When we have situations, so we'll get brought into a body corporate situation where, again, risk management discipline, have the drug dogs go through on a reasonably regular basis. If they're getting the indications within apartments, then follow that up with a specific test. Kāinga just turns around and says, no, you're not coming in.
Yes, there's a whole lot of stuff you said there just got me thinking about a new building that we're going to be managing very shortly. Beautiful, brand new building. Stunning building, actually. I think it's beautiful. And then literally from here to the wall away, there's a big KO development happening, probably 150 units.
Yep.
And I'm thinking, holy shit, like this hope it's got to be well managed from their point of view, because we've got all these people in our building, I'll say, that are wanting to live their lives accordingly, and then right across the way there's a whole bunch of people who are living different lives essentially. I guess the only saving grace here is it's right across the road from a police station, but I don't know. It may be strategic. I don't know, but I can foresee some problems happening there. But what I was leading to with that was about, do you think there's certain aspects of building design or construction that lends itself to either being more or less risk averse?
100%. Yeah, 100%. And that's I think ultimately where collectively we have to look to go. So when you've got a situation where government policy means that the motivation to actively manage the risk to reduce the likelihood of loss is affected, right? So then that's what's been happening for the last 5+ years now. That means that your likelihood of loss is going to increase, so therefore you're going to have to start looking more at consequences and reducing the consequences of loss. And so building design makes a massive difference, and there's a number of factors that come into play, right? So how does meth contaminate a property? Through airflow. So again, if airflow isn't considered when it comes to a building design or properly considered, then that can be really problematic, because one event can compromise multiple different parts of a property. You're then looking at the materials that have been used in the construction. And so again, if architects aren't kind of thinking about this sort of stuff, and they're thinking about the visual, so to your point, it's a beautiful building, and natural timber, for example, is a beautiful finish, but the coatings that go into natural timber are a bloody nightmare when it comes to meth contamination.
Right. Does it sort of hold the meth in the...
Yeah, so there's a chemical bond that forms between the methamphetamine molecule and the materials that are typically used as coatings. That means that it sticks like the proverbial to a blanket. So you've got this thing that looks great. In order to make it cost effective, what you're then into is often having a real high quality veneer over a lower cost timber material, like some form of chipboard or MDF or something like that. And then when you get your meth contamination event, in order to get rid of the meth, you've got to smash it with these chemicals that are being used, and that then absolutely buggers up the finish. So not considering the risk through the design phase and knowing that it's going to happen in those multi-unit dwellings, you end up with this cost which is foreseeable, which you could have accounted for through your design process. And so one of the things that we've been looking at for a number of years now is a coating system. So you have colourless, transparent coatings and pigmented coatings, which have got a slightly higher cost applied. But when it comes to the operation of the building, much easier to clean in terms of general wear and tear. So the harder wearing, easier to clean. So you think about those common areas and the hammering that they can take, and the time, energy, effort, and money that gets spent on cleaning those common areas, getting the marks off the walls and the such like, reduce those operational costs. And then when you get these catastrophic events that take place, again, you're significantly reducing the cost associated with addressing those things. Not because you've sort of shifted the goalposts, not because you've chosen to ignore them, but because you've got a coding system in place that's really easy to clean.
Yeah. Risk aside from, say, meth contamination, like if we go back, 20, 25 years, in the leaky building crisis, some people saw that as a massive sort of opportunity, like, once the whole thing was identified and, people started losing their houses and things, people saw that as an opportunity to buy them cheap, remediate them and then sell them on.
Yep.
So I guess it's not just, drugs or meth that sort of have the risk attached to it, but it's also, these certain types of homes over the years that have been, associated with loss.
Yeah, for sure.
And the weather tightness homes thing is the first one that comes to mind. The next one is probably passive fire protection. I know that's something that's really sort of bubbling away under the surface.
Okay.
Like penetrations and things like having fire collars and all that sort of thing.
Yeah,
it seems to be a lot better now because all these things have to have like a tag and a stamp on them from construction or installation phase. But you get something that was built 30, 40 years ago, and they don't have, you just got a pipe going up through a concrete floor.
Yep.
She'll be right. The flames can get up through there, and it's just that whole other. There's all these other things that have massive risk attached to them, and then like we were saying before, it's not just meth.
Yeah. So I think so it is the general awareness of risk and response to risk a bit higher now than it was before, and I think the answer to that is generally yes, but it only it principally comes on when people put some framework of consequences associated with it. So a really good example is asbestos regulations. So they were brought in 2016, due to come into effect in 2018, and they kind of got significantly ignored, particularly in the residential property space. Now it's workplace-driven regulations, so not residential property-driven regulations, but every residential property becomes a workplace every time an inspection done or every time some work is done, as far as those things is concerned. Now what the regulation said is that every workplace needed an asbestos management plan. Now what happened, and this is people, in my opinion, again jumping on the bandwagon, is that the asbestos testing industry characterised that as that you needed to have an asbestos survey done to specifically identify where asbestos was within your property. Very expensive, sort of $600-700 minimum on a typical rental property, with a limited ability to deliver that service with the number of people who were involved. Now, an asbestos survey isn't an asbestos management plan, but it was sold as an asbestos management plan. And an asbestos management plan, all it basically needs to say is, in the event that we're doing some work that might disturb asbestos, then these are the things that we're going to do on the back end of it, right? Yep. Which is very different from an asbestos survey. So what was the response of government to that? So they created this law that produced focus on a real risk, that was getting some attention and getting some traction and action and change in behaviour, and then they said, well, actually it doesn't apply to residential tenancies unless there's work being done on the property. So that focus that was brought on a real risk suddenly removed, and then you get back to the situation today where there's lots of properties with asbestos containing material within them that are having work done, where that work isn't being addressed, and the risk of associated with asbestos contamination being properly done because it's dropped right off people's radars. Now some businesses have good practices in place. Some require those things. They would ask, a builder would ask for an asbestos management plan. If there isn't one, we do an assessment of risk, get the a survey done as part of that work. But lots and lots of time that doesn't happen, Brady. And it's because we've got this sort of approach to risk, which is essentially, if I have to do something, I will. But if it's left up to me to make a risk assessment and ensure that I'm not going to cause myself or others a problem, then all too often we'll just push it off to one side because I don't have to.
Yeah. It's quite often like risk is associated with health and safety. I've heard you mention health and safety throughout our conversation here. but it's not just about health and safety, is it? There's a whole lot of other aspects to it. I mean, it is largely about health and safety, but there are other parts to risk that are I guess less about health and safety and more about how would you describe it? Might need you to help me out with this one.
Well, it's the economics, right?
Yeah,
so
it's economics.
Take what we're dealing with. Okay.
Yeah.
So to understand the risk from a health and safety point of view, $300. Once you know that you've got a health and safety issue, or you're likely to have a health and safety issue, now we're into a couple of grand. But the health and safety is already been accounted for with that $300 spend. You're then into quantification. So if qualified is a problem, we then quantified that it is an issue, and then we're into the big money as far as decontamination, all that sort of carry on is concerned. But if you look at it from a workplace health and safety side of things, so real estate space and the property management space significantly influenced by real estate sales. 2018, what does the real estate authority say? You only have to disclose properties where the level of contamination is over 15 micrograms in a 10 by 10 centimetre square. We've increased the disclosure level by a factor of 10. We haven't checked with anybody, so we haven't checked with ESR or the Ministry of Health that that's okay. We've just taken this opinion that's been pushed out through government, and we've pushed that out there. What perception does that create within the real estate industry? It's not a problem anymore. Okay. At the same time, WorkSafe, which is the party that's responsible for obviously the workplace health and safety side of things, their figure is 1.5. So all of these PCBUs in the real estate space who've taken the advice from the real estate authority and adopted their processes to account for 15 instead of 1.5 are now at odds with what WorkSafe policy
So it's just
should be saying.
stats, really, isn't it? Like you can eliminate a problem by shifting the numbers.
Well, you can change the perception of the problem, but in changing the perception of the problem, you, in this instance, what we're seeing is that the problem's getting worse, and then you create other issues. So like I say, we've got a whole bunch of PCBUs in that property space and in the building space. Take the building space as a case in point. They're going and doing physical works on property that's may have had a meth lab operating on it. They're not accounting for that as far as their health and safety procedures is concerned. And yet use of a checklist, and if that checklist is indicating risk $300, and you've accounted for that problem before anybody goes in there. And I know that I'm speaking from a position where I've got a vested interest in that, right? But that vested interest comes out of why on earth should people be negatively affected by this illegal activity that's having such a negative consequence as far as New Zealand society is concerned, when avoiding that is such a low cost way of dealing with it, and then not engaging in those things because we're dealing with a perception of risk rather than the reality of risk.
So aside from getting in touch with you guys and engaging your services around risk, what do you think are there's a couple of sort of quick wins that people can get by what can people do to reduce their own risk?
So again, if you looked at it from a property owner's investor's point of view, you'd have a conversation with your property manager around how their current systems and processes protect themselves from this risk, and you consider making method testing between tenants is part of what you would do. From a business involved with property, you should have a policy and procedure that's in place, and some training for staff, because again we have these sort of situations where let's take real estate sales, where real estate salespeople are running open homes, so it's a workplace, in properties which have had labs operating in them. They're getting the employees are getting unwell. You've got members of the public who are being run through a former meth lab who are getting unwell, and yet a little bit of a risk assessment on the front end because that's what our procedure says should happen, and $300, and we avoid all of those consequences flowing through. Yeah,
I guess like modern society, people are busy. I'm not saying it's an excuse, but do you think people sort of avoid risk because they're too busy, or they avoid the opportunity to assess that risk because they're just like, I'm too busy, I can't deal with that now?
Oh, look, I'm sure busyness is a factor. But I think a bigger factor is we like certainty, and we dislike uncertainty. And when you go down the risk route, that's got a lot of uncertainty that's associated with it. And again, that's what might be what you need to do, but all too often what we're pushed towards is what people want to hear, and that's that whole needs and wants debate that could be the topic of a whole other conversation as the reality of it. But typically people they want, the focus is on what they want rather than what they need, and what they need in this instance isn't necessarily to rush out and spend money testing for methamphetamine, right? What they need to do is make a conscious assessment of that risk alongside others as it relates to the particular thing that they're involved with, whether it's buying a property, renting a property, doing work on a property. Consciously assess those risks and make sure you're not affected by them. Don't just ignore them.
What about, like, say, greed? Like, just talking about some of the human sort of emotions, or that come into risk. Do you think people will, if they're, say, a bit greedy about a transaction essentially, or life in general, they might just sort of think, oh, bugger the risk, I just want the money?
Oh, no, I have absolutely zero doubt that is something that some people will choose to do. And when you're an organisation that truly does put people first, there's some challenges and problems that are associated with that. So it's then a case of saying, well, how do you get the interests of those people who might choose to adopt that approach aligned with an outcome that means that people don't get caught out by this stuff? And that to me is ever the challenge that we have to work our way around and through. But are people being caught out because of the of greed? 100%.
Generationally, do you think people the risk has changed? Say from, if you go, God bless them, the boomer generation, and we come through into this latest crowd that are Gen Z or whatever they call themselves, Generation Alpha or whatever they want to be. Is risk awareness or mitigation or acceptance changing as people, as society ages?
Yes, that's an interesting one. I suspect it is, and again, within any particular demographic or age band, there's going to be some people who are more risk averse than others. There are going to be others who have more process around risk assessment than others, but sort of general rules of thumb. I think that as a society, we're becoming less trusting and less tolerant. And then that is reflected in steps being taken and actions which are more self-protective. Okay, so effectively we're managing or being a little bit more aware of risk than we were. I'll give you an example of that. We do a bit of work in the rural sector. So the whole sort of meth flowing out into the rural community is right up there. We dealt with a couple who are farmers, and they had been actively targeted by people to gain employment on their farm because they were trusting and tolerant, because risk wasn't necessarily on their radar in the same way as it might have been for a younger, more risk savvy couple. And what does that then do? Well, it just drives home the nail of harm even harder and further, because not only are they having to deal with the physical consequences, but they feel like they've been emotionally abused by the process as well. So again, I think that's where you've got a role for intermediaries. So the work that you guys do, having those conversations with Body Corps, Body Corps getting better processes in place in terms of engagement with their members and the property owners, the property managers who are working within those buildings to be sharper, to have a certain level of expectation that they would work to, certain level of expectation around the communications that they would have with their clients, so that we're dealing with reality, not perception. All of that sort of stuff reduces it. Set against that is candidly the greed element that you mentioned, right? And that desire to make as much money as you can through as little effort, and being willing to turn a blind eye to stuff that will cause somebody a significant problem when the reality of that problem lands. And so that conflicted interest is a real interesting one. I think some people manage it really well, others don't.
There's plenty of conflicts of interest in our little industry. We try and stay away from anything that will, means that we've got to wear multiple hats or anything like that. But man, there's so much of it. You've mentioned a couple of times perception versus reality. That's a real interesting one from an overthinker's point of view, because I'm an overthinker. gets me in the shit every time. Sometimes that's not true actually. Like sometimes I overthink, sometimes I don't think enough. So maybe I'm kind of in the middle. I don't know.
You're human.
Yeah, I'm human exactly. But can you just explain a bit more about perception versus reality? Because I think that's an interesting thing for people to learn about and sort of unpack maybe for their own benefit.
Okay, so again, come back to the specifics of what we deal with in the meth space, right? So the perception of the risks presented to property by methamphetamine as a consequence of government policy reinforced by the real estate industry communication is it's not really that much of a problem anymore for a lot of people. Obviously, we deal with quite a lot of people who experience the reality of that risk. Why is it not a problem? Well, because it's not so much of a health and safety risk as we thought it was going to be, or we think it's not so much of a health and safety risk as we thought it was going to be. Is the reality, because again, no research has been done that says actually it's not a significant health and safety issue. It's just opinions based on desktop studies rather than real world research. So the perception that's been created by concerted effort, particularly by government and some government agencies, is it's not that much of a problem. You don't need to worry about it quite so much. What's the reality of that? So the reality of that is that we've gone from 1 in 3 properties that have got identified issues having levels above the government proposed limit of 15 to 2 out of 3. And that's coming off effectively 4 times as many properties as there were having those sorts of issues. Before those properties get to that point of contamination, then the sort of stories that we get back, so the real world lived experience of people, is that they were absolute nightmare people to deal with. Multiple complaints from the neighbours, right? So the neighbours have had a whole bunch of issues, damage to the property, holes in doors, split hinges, holes in walls, graffiti, shit everywhere. Absolute bloody pigsty, and they owe me thousands of dollars of rent. That's the reality of the risk, and that reality isn't being communicated through to people. Now set alongside that is, but we've got these systems and processes involved for trying to vet tenants. Well, the ability to vet a tenant has been weakened as a consequence of privacy. We do our inspections, assuming that they actually record the information that they're seeing at the particular point in time. A property manager still has to provide the tenant with 48 hours notice to gain access. Again, an appropriate thing to do, but when you've got somebody who's being devious, and there's more people being devious out there, then the evidence gets hidden away. So that's the reality of the risk, but the perception is that, well, it's not a particular problem we don't need to worry about right now. And you see that reflected in the habits and behaviours of lots of people, and then there's too many people getting caught out. Yeah. They don't have to. So when you ask the question about the sort of conflict of interest, and it was really, really well characterised for me in a recent instance where we had a landlord who is a real estate sales person. Now, the brand that they work for as far as real estate sales is concerned was managing the property.
Right.
Okay. And nobody from the property management side of things, because it's not part of the policy of the real estate brand in that particular office to talk about this to all of their landlords, so essentially transfer the decision-making risk to the landlord. We'll have the conversation around meth risk and the limitations that we've got as far as what we do and how we do it, and how this practice can reduce the likelihood. That conversation doesn't take place. So then the landlord is then in this position where they've experienced a loss and they're not happy. And why isn't this real estate brand that does property management talking to me about meth risk and the things that I can do to reduce the likelihood of loss? So then flip that and say, well, as a real estate salesperson, what do you want people to do meth tests on houses at the time of sale and purchase? No, I don't, because that makes it harder to sell. It's like right there in this one person is the absolute nub of the issue, which is the brand that is managing the property isn't talking about it, because at the time of the sale you've got a situation where if there's a high level of awareness of the risk, if there's more testing goes on, there's more likelihood that the sales process can then actually get compromised. And I get it, right? That you can understand the rationale that gets applied there, but that sort of conflict of interest that exists between real estate sales and property management isn't something that has been particularly well managed by a lot of organisations. Some do it really, really well. But it is a challenge that potentially gets picked up through these regulations that are being proposed by government. Who knows?
So if you went and tried to, educate some of the real estate brands about that, do you think you'd get massive pushback, or would they just sort of dismiss you? Like, what's your feeling towards actually? Because that's a massive issue, if you ask me. Like that conflict, especially from someone who works at a place, and that story you told was just quite horrific.
Well, I mean, again, in that instance, there's nothing wrong with that organisation doing the management, as long as there's that sort of separation of sort of responsibilities and conversations, in my view, right? So, hey, look, this is a risk that you need to be aware of. Do you want to do something? Yes or no? The owner of the property makes the conscious decision, and whether they do or whether they don't, and that's fine. But at least that's not then sitting as a risk with the property management side of the business. But then when you come into the sales space, where everybody knows in West Auckland that meth is a massive risk. If you're in the property business, it's a massive risk. But there's a general level of awareness in the public, but we're not talking to buyers about that because we're representing the interests of the vendor, and the vendor doesn't really want to know. I mean, again, to me, it's a sort of thing where we're prepared to transfer the risk to a new owner, because what we don't want to have is the reality of that risk landing, and the vendor having to suffer the costs that are associated with that, even though for most vendors they would have some recourse to insurance.
But how do you solve that problem though? Like, what would be your ideal solution to a problem like that? Because is it education? Is it like changes to the law? Like that? How do you solve that bloody problem?
Well, so again, it's if we're going to deal to the perceptions of the risk, there is no problem. If we're going to deal to the reality of the risk, then there is. Right? So it's like, where do we sit as far as that continuum is concerned?
It's a massive ethical thing, if you ask me, like business ethics around that. Surely, come on, I mean, far out, Hey.
And I don't disagree as far as that side of things is concerned. But again, is it about every property being meth tested? No, it's about having a conscious risk assessment, and if it looks like there's a reasonable chance, it would make sense to at least consider that. But again, most of the time that isn't happening, because the perception now has been created that it's less of a problem than it was 4 or 5 years ago. The reality is that it's fundamentally different. So again, to me, it comes back down to conscious assessment of risk, and then making sure that risk is accounted for within the process, so that people aren't negatively affected by that risk, who have, I guess, if we transfer the problem onto somebody else, yes, they've had the chance to spend a couple of $300 to get the test itself done, and to make sure they don't accept that risk. But if everything that they're being told is about the perception rather than the reality, then the likelihood that they take those self-protective steps reduces, and therefore the likelihood that the harm is increased as a consequence of this behaviour is great.
Mate, it's been bloody interesting, if you ask me. Like, I've learned a fair bit just sitting here listening to you talk about risk. It's made me, like, at the start I was sort of thinking, okay, this is going to be an interesting topic, but as it went on, it started to unravel a lot more for me, and I was like, shit, this is actually
the stuff that you can do within your business, right? That changes how you do what you do. That means that you're adding more value into your clients because of your knowledge, understanding of that reality, and then translating that into ways in which the entity can be better protected. So, case in point that we were talking about, the economic risk presented by tougher economic times, and the body corporate fees coming through, and debt collection, and so on and so forth. So being aware of that and having a sense of what some of the options are that a body corporate could do adds value into that relationship, right? We've talked previously about that whole coating side of things, right? So that's definitely something that will come through. So every building that you manage has to have bloody paints put on the common property, right? So do you go for the cheapest, or do you go for the one that's going to reduce the operational cost that's associated with it? You know, do you go for the one that's going to be replaced in 7 years, or the one that needs to be repainted in 20 years?
Yep.
You know, those are the sorts of conversations that when you know stuff, you can then feed back in, and you're value adding through the knowledge, skills, and abilities that you bring into your relationships that then helps you to differentiate from who you are and what you do.
Yeah, no, that's definitely another arrow in the it's another it's another tool for us to use it in our
feather in the
service.
cap stuff.
Yeah.
And again, I think as long as ethically, as long as the things that we're doing in our instance, right, it's all about reducing risk. And that's why we're reducing harm once that sort of consequence of loss, you're trying to go through that process, right? With yourself, it's sort of risk reduction, but it's all value adding through the relationships that you have, right? So what are the ways in which that can be done?
Yeah.
And I guess that this is a great example of that. The fact that you're prepared to invest time, energy, and effort in having these sorts of conversations and getting those ideas and thinking out there is a great testament to value adding through to not just your customers but those prospects who are out there and just the industry in general, right?
No, absolutely, and it's like I said, it's something that we'll start to pay a lot more attention to, and it becomes a point of difference. Then
yeah, well, so I think the reality for all of us, right, is that when it comes to that service provision, it can really get commoditized. So then, how do we add value into that space? And because it's otherwise it becomes a race to the bottom all the time. There's always somebody who's going to do it cheaper.
Yeah.
And actually, the lowest cost option is rarely the best one. And so then it's how do we ensure that what people are getting is the best value option, and obviously what we're trying to do in that MEF space is support a physical process, which is the test with knowledge and understanding and information that then means that test has even more value because of how people can communicate around it, because of the fact that they've got that as part of their process, and there's that ripple effect of that transfer of knowledge that reduces the harm caused to people by meth in our instance. But there's lots of other instances of risk where that can be done. It isn't being done because human nature doesn't like uncertainty, and we want to try and turn away from that whenever we can. And if people in positions of authority or responsibility say don't worry about it, I'd rather believe that because that's what I want to hear, rather than engage with the reality because that's all a bit hard, even though doing so is better for me in the long run.
Well, I think that's a good way to wrap it up. That was cool.
Yeah.
Awesome, mate. Thanks very much for that.